Welcome to AARO Academy, and welcome to this presentation on IAS 16, the accounting standard dealing with property, plant, and equipment, PPE in short. In this tutorial, we'll explore the pain points associated with this standard that guides on accounting for the tangible, non-current assets of a business. We will delve into some of the areas that pose significant challenges in application and compliance with the reporting requirements of IAS 16. In the end, we will have demystified the difficulties of reporting non-current assets in the areas of initial recognition, measurement at recognition, subsequent measurement including related models, derecognition, and how such assets should be disclosed in your financial statements to enhance transparency, clarity, and consistency. The first pain point while accounting for PPE comes at the time of initial recognition and measurement. Implementation of the July 2011 interpretation of IAS 16 on cost of testing, as well as the May 2020 amendment to IAS 16, makes it difficult. The challenge being how to account for income generated before an asset is ready for use, and the decision as to whether the sales proceeds from testing an asset in a class of PPE should be used to reduce the initial cost or taken to profit and loss as part of income. To address these challenges, IAS 16 requires a reporter to first identify the date when the asset was availed for use per IAS 16 paragraph 16b. Moreover, the May 2020 amendment on proceeds before use prohibits deducting proceeds before intended use from cost of the asset. Such sales proceeds are recognized in the income statement. The difficulty during subsequent measurement depends on the measurement model assigned to a class of PPE, which can either be revaluation or cost model. Where revaluation model is deployed, establishing the fair value of the asset can be a daunting task, requiring the use of professional valuation, which can be more costly. Moreover, while IAS 16 requires frequent valuation, it does not specify the frequency, leaving it for each reporting entity to decide on the duration between each revaluation. Revaluation frequency is dependent on the volatility of the changes in fair value of the particular asset. Choosing the cost model due to the challenges of revaluation, as highlighted above, may not be the solution. The cost method has its fair list of challenges, starting with determining the period over which an asset is expected to be available for use by an entity, or the number of production of units expected to be obtained from the asset by an entity, and the residual values of PPE. Useful life and residual value are subjectively estimated and can vary from entity to entity. For instance, a building housing a manufacturing plant with vibrating machines may have a shorter useful life compared to the one used as a classroom. In addition, establishing the residual value at the end of such asset's life requires estimation, which adds to the complexity. Such estimates affect depreciation and, by extension, the profits reported in the financial statements due to these judgment calls. Secondly, the standard directs entities to separately depreciate significant PPE components, thereby posing a challenge of identifying these components, as the identification process may be subjective. One must bear in mind that allocating the asset's overall cost to the individual component can be complex and may require detailed and difficult analysis. Cutting through such complexities is what we do in AARO Academy IFRS training. Finally, you cannot discuss measurement of PPE without mentioning the challenge on impairment. Deciding when to test an asset for impairment is not easy. One will need to continuously observe for indicators of impairment specific to that asset, and where such is confirmed, performing the impairment test itself will be complex, as you will need to estimate cash flows and select appropriate discount rate for such cash flows. An exercise that is subjective and difficult. An asset should be derecognized either at disposal or when it is confirmed that there is no future economic benefits expected from its use. A challenge therefore arises regarding determining the exact point at which an asset no longer has future economic benefits. The standard has an extensive disclosure requirement to support the PPE balances reported in the primary financial statements. As a result, IAS 16 calls for extensive, complex, and at times, time-consuming disclosures covering measurement models, depreciation methods adopted, and the associated estimates and judgments. Such information should be disclosed with clarity and consistency. The disclosures required may need to corroborate with other disclosure requirements from related standards, such as the IFRS 16 leases may have disclosures related to depreciation of PPE, the IAS 2 inventories, among others. In our training, we will make your reporting a non-event by taking you through a disclosure checklist to ensure completeness of your disclosures and compliance with IAS 16. Thank you for tuning in to our tutorial today. IAS 16 is a widely used standard. However, entities have not fully appreciated the complexities in applying the cost model, revaluation model, impairment testing, and the judgments required while derecognizing assets. To address such complexities, we invite you to attend AARO Academy trainings for an in-depth and practical training on IFRS topics. Our aim remains to make your reporting a non-event. Do not forget to like and subscribe to our YouTube channel. Visit our website for more information. You can also follow us on our social media platforms. I hope to see you soon again.